world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Naftali Harris. Naftali is the co-founder and CEO of SentiLink, a synthetic fraud prevention company. Prior to starting SentiLink, Naftali was the first data science hire at Affirm, where he built some of the lender's original fraud models. For the past couple of years, Naftali has been working to solve the problem of synthetic fraud, a surprisingly pervasive and little discussed source of credit losses for banks, which we get into today. Earlier this year, SentiLink raised a $14 million Series A round led by Andreessen Horowitz, in which Affirm's Levchin and Plaid CEO Zach Perret also participated. In addition to the insights we deliver through our podcast and newsletter, Rebank offers advisory services to fintechs, banks, and corporates. Drawing on our experience starting, running, and advising fintech businesses, and our vast network of the most impactful fintech entrepreneurs, investors, and innovators around the world, we help companies make sense of fintech, work through specific questions, and optimize proposition and strategy. For more information about our services, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Naftali Harris. Naftali Harris, welcome to Rebank.
Thank you.
So it's great to connect with you today. I've been looking forward to this conversation. We connected face-to-face briefly last week in your San Francisco office, which was great, and you got to update me a little bit on what you guys were working on and some of the specific problems that you guys are solving. I found to be fascinating.
Well, Will, I tell you, it's a good thing you came to our new office and not our old one, because our old one was actually in the basement of a building in a really terrible neighborhood. So you really got the special treatment, let me tell you.
Well, you've clearly upgraded the premises after, a big Series A round that you guys raised pretty recently?
That's right. Actually, right after we did that, our investor said, you guys have to... So we were in the basement of a building on Mission Street between 5th and 6th. And when I say a basement, I mean literally a basement, no windows, no skylights, nothing. There were these pipe noises that would go off and shake the whole building. We had some rodent issues, so really not the best place. And right after we raised the Series A, our investor said, hey, you guys need to take the money we just gave you and immediately move into a new place. So we went and did that, and our engineers and the whole team is a lot happier about it, let me tell you.
Well, having seen your new offices, I can see why they're happy. So tell us briefly, just high-level, quick elevator pitch about SentiLink and the work you guys do.
For sure. We're preventing fraud for banks and lenders, and specifically focused on forms of fraud that most people haven't heard of, but that nonetheless are a huge issue. So we focus on a form of fraud called synthetic fraud, which is when a fraudster will invent a fake person, convince everyone that this fake person is real, and then use this fake person to open up accounts or apply for credit. This sort of contrasts with identity theft, where I would steal a real person's identity and use that real identity to open up accounts or apply for loans.
So this phenomenon sounds kind of crazy, right? Because, I don't know, at least I, as a non-deep expert around fraud, identity theft, tend to think of these as very complex problems. But it sounds like some of the biggest issues are actually hiding in plain sight. And you guys are applying very intelligent approaches to eradicate some of these issues that frankly don't feel like they should really be there in the first place, but are due to some structural quirks of the system.
Yeah, I mean, I think one thing that's super interesting, you and me both, honestly, in terms of being unaware of these kinds of issues. My co-founder and I ran into the problem of synthetic fraud when we were at the online lender Affirm It wasn't something I'd ever heard of. It wasn't a problem I even thought could exist. I mean, who would have thought that, you can make up a fake person and that no one is checking this, essentially. So it was something that, for me at least, was deeply surprising that this was even a possibility that you could do this.
Can you quickly describe how you first discovered the issue and what about it made you realize that there was an entire company to build around solving this problem?
For us, the sort of smoking gun came when we had, again, when I was at Affirm, we saw the same person apply for credit a dozen times with the same name and date of birth, but 12 different social security numbers. And so, certainly with a name like Naftali Harris, there's not that many people named Naftali Harris, and there's definitely not many people named Naftali Harris born on the same day. I mean, here we had a rare name and 12 different identities, all with the same birthday, with a dozen different social security numbers. So immediately we said, look, there's no way that all 12 of these are actually like legitimate identities. So we looked at the credit reports and said, hey, presumably the real identity here, or if there are any real ones, we'll have a credit report. And what we saw is that all 12 of them actually had distinct credit reports. So at that point, we realized that whether or not somebody has a credit report doesn't actually mean very much at all. Fake people can have credit reports. Real people can have credit reports. And the act of having a credit report doesn't actually mean that you're a real person. So we started looking more into how credit reports are created. And what we learned is that the bureaus have no concept of who's real and who's not. What they do is they wait for inquiries or updates on people's loan performance from banks and lenders. And the bureaus just assume that the banks and lenders know who's real and who's not. And so if enough people ask about a particular identity, if enough lenders ask about a particular identity, the bureau will just go and create a credit report for this person. So what we would actually see is oftentimes as people would apply for credit, we'd hit the credit bureau, and sometimes the bureau would respond with a no-hit response, meaning that no, they'd never heard of this person. As an example, if you apply with the name Mickey Mouse, the bureau is not going to have a credit record for you, which makes sense because there is no, I'm sure someone's name is Mickey Mouse, and Mickey Mouse, if you're listening to this, I apologize. But, in general, there's not a Mickey Mouse born on a particular day with a particular social security number. And so the bureau will respond back with a no-hit response. But when Mickey Mouse comes back and applies for credit a week later, if you hit the bureau a second time, the second time the bureau will say, yeah, we know about Mickey Mouse. We heard about Mickey Mouse last week. And so the actual act of applying for credit will create a credit report for a fictitious person.
So that is not the way that intuitively I would have expected credit reports to work, i.e. that they're created out of thin air when a credit bureau gets pinged, or maybe the second time a credit bureau gets pinged. I would have assumed that there's some sort of, agency behind them. I mean, at the end of the day, your social security number is kind of always it feels like your user ID. But it sounds like that's not the way that credit reports work. How would someone get 12 different credit reports? How would no credit bureau recognize it? And why isn't there some sort of centralized owner of all these things?
Fundamentally, the bureaus just have no way of validating this. And so they've just relied historically on banks and lenders to do this. And, one of the interesting things is that everyone is getting fooled by this. So, actually the way that we realized this was a big problem and one that it would make sense for us to tackle as a standalone business is we would look at credit reports that did not belong to real people. And, we'd say to ourselves, look, Joe Schmo is not a real person here, or Mickey Mouse is not a real person. But we would see credit cards and auto loans and personal loans of tens of thousands of dollars, in aggregate hundreds of thousands, from every major bank, every major fintech lender, every regional bank, any bank that you've heard of, and any one that you haven't.
All against these fictitious credit reports.
All of these fictitious people, yeah. So at that point, my co-founder and I turned to each other, and we just said, look, are we the crazy ones here? It seems like everybody else thinks these are real people, and we know that they're not. So started a business to help organizations detect fictitious people.
I appreciate that the most direct way of, quote unquote, building up your credit report once you've managed to create it, if it's fictitious, would be to get approved for credit at these banks who are effectively approving you on the back of false information that you supply and that they either can't or don't verify. Are there other ways that people build up credit reports?
Yeah, that's a terrific question. Actually, once you create a credit report for a fictitious person, there's not very much you can do with it. You can get a low limit credit card maybe, or a small secured card, but no bank is going to give you $20,000 of credit. So what you'll do is you'll build up credit over time. You can do that sort of the slow way, where you're making payments, asking for credit line increases, and slowly building your credit over time. The fraudsters have been quite a bit smarter than that. And so over the last maybe 6 months, we've seen them particularly exploit authorized user trade line marketplaces, which is a real mouthful here. But essentially what they're doing is piggybacking on the credit of others. So the way this works is if you have a credit card, you can add somebody else as an authorized user on that credit card, which means that other person will get a card which will have their name on it, but you will be the one that's actually financially responsible for that card, and it'll tie back to you behind the scenes.
This is like adding your spouse on your credit card sort of thing.
Exactly. It's like adding, most of the people who do this are adding their spouse or their kids, maybe occasionally like an employee or something like that. But it's supposed to be used for your family or people that you actually know. But what a lot of people don't realize is that the recipient of that card, for most issuers, will actually have that card show up on their credit report. So, as an example, if you had a $20,000 credit card from 2002 with perfect repayment, and you added me as an authorized user on that card, I would suddenly have a $20,000 credit card from 2002 with perfect repayment, and my credit score would go up quite a bit as a result because it looks like I'm a lot more creditworthy. And so that's sort of unexpected for, I think, most people. And fraudsters have exploited this, where because they know that they can boost their credit pretty dramatically just by having their synthetic identities get authorized user trade lines from others, they will actually go to online marketplaces, pay strangers to add their fake identities as authorized users, and grow the synthetic identities credit very, very quickly.
And this is presumably highly illegal.
Well, committing synthetic fraud is highly illegal. Believe it or not, and I'm not a lawyer, so don't take this as legal advice, but purchasing authorized user trade lines, although it violates the terms of service with banks, I don't believe is actually illegal. I think from the perspective of the banks, it's a little bit challenging to figure out where to draw the line. So, definitely you should be able to give an authorized user card to your spouse. You should be able to give an authorized user card to your kids, your friends, maybe. But, strangers probably not. But I think it's very tough for them to kind of draw that line. So if you look at the terms of service for banks and you look at the fine print, they'll say things like, by giving this person an authorized user card, you're verifying that you have some relationship with this person or that you know them, which is pretty vague, I think, from a legal perspective.
Yeah. So the natural question is, why on earth would you ever give some complete stranger, in this case, fraudster, access to your credit card, right? Because isn't there some sort of shared liability, or if your credit history for the card is on their credit report, presumably it kind of works both ways. So they're going to ruin your credit and probably run up tons of debt and leave you on the hook for it?
The way this actually works is that the recipient of the credit card actually will never take physical possession of the credit card. So if you sell the right to be on your credit card to me, you're actually going to put my name, my date of birth on the card, but you will have it shipped to your home. And so the card will come to your house. It'll say my name on it. You'll get the card, you'll activate it, you'll chop it up, and I'll never actually get that card, but you'll wait a month or two and it will show up on my credit report. And so from your perspective, you're making a couple $100 by selling this credit card to a stranger with pretty low financial risk to yourself. You are breaking the terms of service with your bank, but I'm not actually going to be able to get that card. I'm not going to be able to spend any money on it. That sort of risk is pretty minimal.
Okay, so this is clearly dark web stuff.
That's what you think. It's actually not on the dark web. If you actually go and Google buy trade lines, you'll find dozens of these. So SentiLink, actually, we've categorized over 100 of these that we keep track of. You can find these just by Googling. You can find them on social media if you go on Twitter or Instagram. It's a lot of folks in the sort of credit repair business that are doing this. They advertise, this is for credit repair, this is legitimate. Obviously, it's a pretty gray area, and the people that are doing this for fraud are breaking the law.
Unbelievable. And apart from finding this baffling, I'm shocked that, I don't know, law enforcement hasn't shut this down, that banks haven't clubbed together to shut this down, that lawyers aren't all over this. Is this a big an issue as it seems?
Yeah, it's a huge issue. It's an issue that gets a lot less attention than probably it merits. And the kind of big reason for this is that all the kinds of issues that we solve are what I would call consumer victimless, which means the sort of victim of the crime is the financial institution rather than an actual consumer. With synthetic fraud, it's not like identity theft where there's a victim who's taken advantage of and their identity is used and their credit is ruined. With synthetic fraud, by and large, there are no real consumer victims to find out about this. And so, with identity theft, everyone knows about it, politicians know about it, the public knows about it, and most listeners probably either have been the victim of identity theft or at least know someone that has. But with these forms of fraud, there are sort of no direct consumer victims, and so it's not really something that gets as much attention. That said, there are actually bigger problems right now than identity theft, which I think these days is a little bit better understood, and there are sort of more effective ways of combating it.
What's your sense of the extent to which banks and lenders understand this issue? One, the presence of this issue, and two, the extent of it.
I would say it varies by the bank. One of the big challenges is that because these forms of fraud are consumer victimless, the banks have a very hard time figuring out which losses are associated with fraud and which losses are credit losses. Every bank expects to lose a certain amount of money on its lending operations. They do their best with underwriting, but there's a certain amount of randomness where some people, unfortunately, will lose their jobs or suffer financial hardships, or there'll be an illness in the family and legitimate reasons why someone will have a hard time repaying. With identity theft, if someone's identity is stolen and a fraudster opens up an account in the name of the stolen identity and then stops paying, when the bank calls and eventually gets a hold of the victim will say, hey, I didn't authorize this. This wasn't me. And the bank will realize this was a loss that was associated with fraud. But with synthetic fraud or with people masquerading behind these authorized user trade lines, the bank, when they call and try to discover why did we lose money here, there's no victim that says, yeah, this was fraud. Instead, they say, oh, it's a synthetic identity. They'll say, oh, I lost my job. I had a hardship. They'll lie and pretend to be just regular credit losses so the bank goes and looks elsewhere. So I think that's one of the reasons that it's pretty challenging for financial institutions to get a real sense of the size. I would say nowadays, maybe the last 6 or 12 months, banks have been a lot more aware that they have issues like this. I think they're having a hard time figuring out where to look for them and figuring out the size. But I think in the industry, at least, this is a topic that's gotten more attention in the last maybe 6 or 12 months.
Have you guys, presumably you have you tried to estimate the magnitude of this issue in dollar terms?
Yeah, based on our work with the larger financial institutions, we think it's around $1 to $2 billion annually.
Of just straight losses due to something that feels like it should be so simple to solve. I guess if you start brainstorming, it's like, okay, well, is there a better way for credit bureaus to create credit files to somehow associate them with real people? Should or can banks be requesting additional data points to better identify applicants? And that piece around the social security number and the fact that it's supposed to be the unique reference number identifying any U.S. citizen or resident, why isn't the social security number sufficient to make this a non-issue?
If you wanted to design the worst possible identity system, I don't think you could have done much worse than what we have in the United States, unfortunately. Social Security numbers were initially used to administrate Social Security benefits. At the time, there was no way of kind of giving a number to everyone that you could then use. The Social Security Administration created the Social Security number, and then it really took on a life of its own, and financial institutions started using it. The rest of government started using it. It's supposed to be this identifier of a person, but there's a ton of problems with it. Probably the most notable one is it's supposed to be someone's username effectively, but it's also supposed to be secret. So it's effectively like your username and your password kind of at the same time, which is like not how you want to design a secure system.
Far from best practice.
Far from best practice. Yeah, we could do better. The other interesting thing is there's only 1 billion of them. They're 9-digit numbers, and so there's only 1 billion possible SSNs. In fact, there's only 900 million because every number that starts with a 9 is an ITIN for international folks. And so it's not like it's hard to find a valid number. If I just named a 9-digit number, pretty good odds it actually belonged to somebody.
Do they recycle them?
They haven't had to recycle them yet. They will in about, I think it's projected to be 50 or 60 years. Eventually they'll run out. But I think even more notably is just if you picked 5 of them, one of them would certainly belong to somebody.
What is SentiLink doing specifically to address the synthetic fraud issue?
We do a lot of work to figure out if people are real or not. Broadly speaking, that decomposes into 2 parts. One part is looking at an identity and trying to assess the sort of cohesiveness of that identity. Real people behave in consistent ways, and fake people often look pretty bizarre. So like as an example, like a typical real person, they're born, they get an SSN the year that they're born, if they're born more recently, or in the past they got SSNs issued typically maybe when they turned 16 or 18 or so. They then kind of grow up in a place, maybe they'll move somewhere once or twice, maybe they'll move somewhere for college and then move back. Their history will start typically when they turn roughly 18 or maybe like 20 something when they first get credit. With respect to everyone out there, like their histories are kind of straightforward. With fraudsters, though, it's a totally different story. So it's like they'll be born in 1970, but get an SSN issued in 2009 in Wisconsin, but they have no history until 2017 when they suddenly showed up in the Atlanta area. From there, they then allegedly were at a different place every month, all of which have a bunch of other people that look super similar in terms of short histories and lack of cohesiveness. And so that kind of identity doesn't make as much sense in terms of their history compared to a real person. The sort of other part of this is we look at identities and compare them to each other, because when a fraudster is making up people, they'll typically make up a whole lot of different fictitious people. So you'll look and you'll find a dozen different identities, kind of like the one I mentioned at the beginning of this podcast, where they're sharing some overlapping information of some sort. Effectively, the fraudster invented the same person a number of different times, and we'll see things like a dozen different identities that maybe don't literally all share the same name and date of birth, but they might have sequential SSNs. So you'll see John Smith with the SSN 1, 2, 3, 4, 5, 6, 7, 8, 9, and then Jane Smith 1, 2, 3, 4, 5, 6, 7, 9, 0. And sort of so forth, like real commonalities between all these fictitious people.
To what extent is your technology currently deployed to the people that clearly so desperately need it?
We are working with several of the large U.S. banks, so the kind of top 10 ones, the ones you likely have in your wallet. We work with a number of the fintech lenders, including most of the small business lenders, which is where we first got started. We've done work in the card space, in the auto lending space, in unsecured personal loans, and recently in deposits, brokerages, some of the telcos. I may be forgetting one or two. But we've gotten distribution, I'd say, from the sort of largest banks to the smaller startups.
Based on what you've described, based on your guys' deep understanding of the industry and the problem that you're addressing, what are the top, say, 3 things that the industry could be doing to reduce fraud in general?
By far the biggest, and this is, I think, what's most exciting to us longer term, The industry should really be working together. It does not make any sense where if somebody steals an identity or makes one up or commits fraud at one bank and that bank discovers it, when the person goes on to a totally different bank, there's no way for the second bank to realize that the first one already saw some fraud. Back when my co-founder and I were at Affirm, we were pretty proud of the systems that we built up to prevent fraud there and pretty excited about our ability to detect it, but we weren't perfect and sometimes fraud did get through. And, for us, knowing that somebody else had already looked at these identities, thought they were fake or thought they were stolen, would have been incredibly useful for us to know. And, obviously, the fact that we were finding fraud at Affirm would have been something that was incredibly helpful for the rest of the industry to know as well. So I think the top thing for sure in financial services for identity theft prevention, for fraud prevention more generally, would be just sharing information, like a shared industry-wide blacklist.
It doesn't feel like that's somehow a competitive advantage for one bank with respect to another. It only helps everyone. I feel like if you come together and look to deploy
that's
anti-fraud
totally right.
solutions, right?
I mean, I think if you look at banks, they compete heavily on underwriting, on marketing, on branding, on pricing to some extent. But I think for fraud, there's actually a lot of common ground. Fraud is a cost that is huge for the entire industry. And I think to the extent that organizations can work together to solve it, that they'll really be beneficial for all of them.
Mm-hmm. Mm-hmm. You guys have clearly been working on a very specific problem that you've picked up. I imagine that fraud prevention around credit, like so many parts of security generally, is a fast-moving and fast-evolving space. If you think of it as static, then it's like, okay, great. Well, everyone uses SentiLink software, and maybe banks come together to create some sort of centralized database of fake accounts that no one lends to. But surely bad actors are moving as fast or faster than those trying to get people back on the right track. What in your mind does the evolution of fraud prevention look like? Or at least, what are some of the main considerations likely to be?
In terms of how fraud is going to evolve, that's super hard. I do know that it'll still be here. I just think the fraudsters will be doing different things. For us, the approach that we take is we actually have a team of analysts that review fraud manually to make sure that we understand what the fraudsters are doing next. So essentially we can be the first to know when they change their tactics, the first to know when they're trying something new, so that we can sort of follow them to whatever they decide to do next. Certainly with all of our partners, once we've gone live with them, the synthetic fraud rates have gone down, obviously, but the fraudsters have started to try new things. So for us, it's important to stay on top of it.
Excellent. Naftali Harris, thank you very much for joining us today.
Awesome. Thanks a lot, Will.
Thanks for tuning in to Rebank. If you liked today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.